Information provided by Wall Street Petting Zoo is for educational purposes only and not intended to be financial advice. Please consult with a licensed financial advisor before making any financial decisions.
Sounds like you've got some good financial experience there, both as a retail investor but also as a professional. Can you say just a little bit about what it takes to be a certified financial advisor?
Yeah, well, the main things about being a certified financial advisor are obviously passing the test and working for a company that can certify you. I think that one of the big things about investing other people's money is that you have to be very risk averse to a certain degree, regardless of how much of a risk appetite the person has. Really, the way that the laws are written in the United States right now are if you're working as a personal financial advisor for somebody um, in a normal capacity, you have to go from basically completely risk free type of investing to still pretty low risk investing. There's all sorts of trouble that you can get into if you get into more exotic investments. If you get into cryptocurrencies or if you start getting into real complex option strategies with somebody who's just using you as a normal financial advisor, you're not running any sort of a hedge fund. You're not running an actual LLC or anything like that that's invested in one specific investment or one specific type of investment. So I think that on the professional side, there's actually it's surprisingly constrained currently with the way the laws are written. So you sort of have to stick to the major markets. You have to make sure that you don't lose too much money for people. You're supposed to be a fiduciary, so you're supposed to do what's in the person's best interest. But what's in the person's best interest is codified in the laws as being relatively risk averse. So in my personal investing, I'm much less risk averse than I was throughout my career as a financial advisor. But I would say that aside from actually having the people skills, getting hired by a company, passing the tests, I'd say that one of the things that you have to have is discipline to keep your investments kind of regular and within like a real solid strategy, risk averse strategy.
Yeah, I remember when we were first talking about investing. I forget when exactly we started talking about it, but I remember the first stock quote we were talking about between us was Mexis Gold. Do you remember that?
Oh my gosh, yeah, I do remember that. That was a penny stock that went up quite a bit, and then it went down quite a bit. So I haven't looked at it for a long time, but I think the last time I looked at it, it was
Yeah, it's
under 1 cent per share.
it's still pretty low.
Yeah, yeah. So that was one of those. That was one of those stocks that got a tip from a guy, and it went up when it was supposed to go up, and I believe it's gone down ever since then. Oh man, what were some other investments back then? I think about that same time I had put a bunch of money into CBIS. It was Cannabis Sciences Inc.
Yeah, Cannabis
and
Science and ERBB
and
Transbite Company at the
ERBB.
time.
That's right. So the Cannabis Sciences, I remember that went up wildly, and then it tanked, and then it went up wildly again. And I remember I was talking to you. I was in my condo in San Diego before I moved further to the south, and I remember thinking, man, there's like such a craze with the marijuana stocks right now. I think I might just want to hold on to it. I remember you being like, they don't really make anything. They keep on talking about making stuff, but they keep on changing direction and everything. I don't think it's ever going to be higher. I remember I sold most of it when it was pretty high, and it was the same way. It just it crashed down after that. So
Y-
I got in that one and out of that one pretty successfully.
Yeah, those penny stocks made me a lot of money, but at the same time, I think I made the mistake of staying in a little bit too long on ERBB. I think I lost close to like 2 grand on that, but I made like 6,000 during that period. So I mean, it wasn't like a complete loss, and I used that money just to like reinvest in actual uh, like normal day trading stocks. So uh,
Yeah,
luckily, those they served their purpose.
Yeah, I had a real similar experience with trading in the real small cap and the penny stocks as you, and I think it was around the same timeline. I think when the two of us had been out of college for a few years and we had enough money to invest some money, but weren't making probably enough money to have a real sound strategy. We were getting in and out of those small stocks, and both of us I think made a little bit of money off of it. And my investment strategy since then has gone radically more to more established companies, or at least larger companies. I haven't been in a penny stock for a bunch of years at this point. But like you said, they served their purpose. They made like a little bit of that initial seed money at a pretty young age to go into slightly more traditional investing strategies with companies that are a little bit more established and probably are never going to drop to $0 during the period of time that we're in them.
Do you think that trading penny stocks, is there sort of a space for that? I mean, is that something that is just too risky to even mess with, or are there people who do well if they learn the principles of trading in that market?
Well, yeah, I think that there's an answer to that that's more than just you know is it okay for people to be in, people not to be in. I think it's like you said, there's a space for it. um you have to think that every trade that happens, there's a buy side and there's a sell side on it. So theoretically, everything that goes in there, um somebody's making the money and somebody's losing the money. So when a stock goes public initially, during the IPO, the company itself is selling the shares generally. And when the company sells the shares, the money goes to the company or goes to the shareholders of the company at the time. But after that initial IPO, everything's in the secondary market. So at that point, every single trade that happens, there's somebody who's a winner and there's somebody who's a loser on that trade. So the big risk with penny stocks is that there are big winners and there are big losers. So if you end up being a loser on a penny stock, if you have not taken the risk in a manner that you can take the risk, you take the risk of completely blowing out your portfolio or blowing out your bankroll and sort of taking yourself out and causing harm to yourself financially that you probably couldn't afford. So I think that with penny stocks, there's definitely a place for it. I believe a lot of penny stocks are traded on the over-the-counter exchanges, and as hard as people try to not have insider trading or have insider tips and things like that going on, they try not to have pump and dump type scenarios. The SEC exists theoretically to punish people for all sorts of things like that. There's fines, there's jail time, but really, when you look at how many of those penny stocks pump and dump, how many of them people buy, a million shares because their friend told them to buy it because their friend knows somebody who works there, and then it went up, from 1 cent to 10 cents, and they get a 10 bagger on it. Just the astronomical number of trades that are going on like that. The SEC can never, ever really regulate it unless there's major changes to the market, which isn't gonna happen ever. And because of that, I think that the fact that 99.999% of people who are doing that never get punished for it, means that if you have the opportunity to do something like that, you're confident in your sources, you're confident in your people, and you can afford, if it doesn't go the way that it's supposed to go, to lose the money. There's people who've made astronomical amounts of money trading penny stocks. So I think that the main thing with the penny stocks is to just make sure that you're not investing more than you can lose, which people say about all stocks. But if you're going into like an S&P 500 ETF, the odds of you losing all of your money are theoretically 100%, just like anything, but they're realistically 0%. There's no way S&P is just going to collapse. But with the penny stocks, like I said, you might make 10 times your money, but you also might lose all your money. So yeah, I think that if you're confident in it, there's no reason not to go into it. Just, man, people go in it with all their money. That's that's a ballsy thing to do and possibly a tragic thing to do.
Yeah, I remember. I think I was talking to you a couple months back about because I've basically avoided penny stocks since the collapse of like the medical marijuana industry.
Yeah.
But I remember I watched a podcast that involved Mr. Wonderful from Shark Tank, and he mentioned he invested in the penny stock Mind Medicine. And I was like, this guy doesn't invest in just anything. Like, he spends his money wisely. and it's like it's basically mind medicine is around basically like psychedelics and the research behind and helping to cure like PTSD or at least help treat it. And I bought in when I watched that podcast back in June, and then I've already like doubled my money pretty much since then because it's turned from a penny stock to slightly above it's been hovering over $1 for like the last couple of months. So there's definitely a lot of opportunity to make a lot of money with penny stocks, but there's a huge downside because it's high risk, high reward type scenario where it's almost akin to gambling, but it's not gambling, but at the same time, it basically is.
Yeah, I think I remember talking to you at Mind Medicine, and I've been following them. It's one of those things, I follow it, and I'm like, oh, maybe we should put some money, and then it goes up. Oh, maybe it's going to pull back, and it's just not pulled back, essentially. Yeah, I think it's up double from when we were talking about it originally, and it's interesting because it's a company that actually, I believe they're going into phase 2 medical trials for it right now. So I think they've been experimenting with LSD for for post-traumatic stress disorder, and I'm not sure how they got a license for it. I haven't done that much research on it, but I don't, nobody was legally allowed to experiment with that for a long period of time, and they've actually gotten through their phase 1 trial and they're into their phase 2 trial. So it's one of those things where when you're talking about the over-the-counter stocks, the stuff that's not regulated by either the NASDAQ or the NYSE or even the Amex or anything like that, they have like much lower disclosure requirements. So if they don't have any proof that they can actually make anything yet, then it's super, super risky. But the fact that they're actually going through the FDA and they're through their phase 1 trial now into their phase 2 trial, even though they have way less disclosure requirements financially because they're not on one of the major exchanges, the fact that they're involved with the FDA has super stringent protocols that they have to follow. So there is like a level of due diligence you can do with them, which is the fact that they've been fast tracked onto that phase 2 trial. And I think that when you're going into penny stocks, you kind of need to look at stuff like that. Like if there's absolutely nothing that you can like solidly say this is being regulated, the FDA has all these different requirements and loops you have to jump through, all sorts of laws you have to be compliant with to get into phase 1 and then to get into phase 2, phase 3, phase 4, all that stuff. Then you're taking a huge gamble because you don't know about it. But then there are gems like Mind Medicine that I'm not sure exactly what the history of the stock is. I'm not sure if it was much higher at some point and they got delisted, or if it's a company that just went public at a very low price and has been building on themselves. But there actually is like solid due diligence for the company. So it has that possibility. You look at it and you say there is some stuff there that there's no way they can really be lying about because the FDA is not going to allow them to lie about it. And because of that, that seems like, it would be something that has a massive upside risk with with probably slightly less downside risk compared to other penny stocks, just because you know something about it. You know that what you know about it is actually real.
Yeah, I think you raise a good point, which is that a lot of the really small companies, because of the lack of regulation, they're just outright fraudulent.
Yeah, exactly.
There's a fair amount of that. And I also think that when you're dealing with like IPOs, a lot of IPOs end up going up really fast in the beginning, but then they sort of crash down because these companies are going public at what they think is sort of the peak price. So they're going to go public at a time when they think it's optimal for them to sort of harvest as much capital from the valuation of their company as they can. And so you've got to just know that these companies are coming out at a time when it may not actually be the optimal time to buy. They're selling because it's the optimal time to sell. I mean, an IPO is a decision to sell,
Yep.
So I think you've got to be really, really careful with the pennies and with the IPOs, and you've really got to know what you're doing. Well, that's all for today's show. Wall Street Petting Zoo is available through YouTube, Podbean, Stitcher, or iTunes. We would love if you would subscribe and give us a 5-star review. You can also find us on Facebook and Twitter, where I post throughout the week. We don't do any advertising for the show, so word of mouth is the only way we get the word out. And if you heard anything on the podcast this week that was useful to you, we would love if you would give us a like or share on your favorite social media platform. We really appreciate your support. You can also support the podcast financially by clicking the referral link to Webull under our YouTube video and opening a Webull brokerage account. If you deposit $100 into your Webull brokerage account using our referral link, not only will you get some free stocks, but we also will get some free stocks, and that helps support the podcast. Webull's great community and powerful analytics tools make it our trading platform of choice. Thanks so much for listening, and we will see you back at the zoo next week.